Good morning. All right. Can you guys see that SPX chart? That's sitting on top of the other charts. I don't know if it would show up if I did it like this. Doesn't look like it. No. Okay. All right. It's like you put it on top, you signal. I thought to show it both instead of going back and forth, but it doesn't display. All right. So yawn, big tech earnings. Anyway, they were flip flopping around. Apple down a little bit, and pretty much other stuff up, but running in place for the moment. So we got kind of trading range beginning here. You can see the S&Ps here creating this support and this resistance and just in the middle of it. So going nowhere for the moment. Consolidating last week's gain. Normal. And we'll see which way it goes. If it gets above yesterday's high or below yesterday's low, opens up the door to one way or the other. So SPX today. To the downside, and I typically like to wait to see which way markets move in the morning. So they're not moving at the moment, really not doing anything here. Qs are up here a little bit, but so as far as premium goes, I highly doubt it gets through 44.50, which is up here. So you can go 44.45, maybe a little dip, 44.45 would be what to go with. And on the downside, 43.50 will be support, should be support on the move down. So above that, or just below that, 43.45 or 43.40. And you got a little consolidation right there. You've got the the 50 number there. So you got that protection and last week's low. So those are the levels to consider. If you want to go that close, you saw this premium there at 43.45 and 40. Yeah, you got that line in the sand of yesterday's low, and then the gap fill. Oh yeah, there's premium up above, sure. It's always about a choice. Do you want to get that close to it? Something. One of the things to consider here, and we look at the normal levels of what should be support and so on. But just from the hourly chart point of view, looking at this and this vertical move to the downside, should this, whatever, fail, you could get a break below that low, could send it down there. So while we've got this shelf and we know we've got the big open interest, not seeing, that big open interest there, that level, just based on this momentum move concept, would be the extent. So 43.40, and then I think would be a safe level. Going to take some heat, of course, as long as it doesn't violate this low, but going with a spread here, kind of like in the middle of the danger zone there. So what was the choice? More money, more reward, more risk. Okay. John Daniel addressed that T-Doc. I saw that going across the tape. All right, Qs. Little sell-off yesterday. Good morning, Deb. Little sell-off. And so that sell-off all of a sudden was like, hey, all these funds, the thinking originally was, hey, you know what, earnings come out, earnings are great, which they were great. Apple gaps up, they sell. Well, they all blinked and they were like, I'm not waiting for this. I'm going to sell ahead of time. And so, we make some assumptions as to what happened, but a vertical move to the downside. So when prices come down, right, you can see here, this is a gap, but it's similar as if we had multiple bars. But this was a vertical move to the downside after it started going down, it retraced and then down. This is a vertical move to the downside from the top, which we view as being, an igniting type of a move. And now looking at the futures, see they're up a little bit. You see the vertical kind of a move, which came from a consolidation. So being in an uptrend, creating a pivot, testing the pivot, buyers show up, test the pivot, buyers show up. It's supposed to go up. Well, the way it came down communicates to us that, yes, majority were thinking by the dip, it's going to go up. And then it's like, what the hell happened here? Sell, sell, sell. And now that it's up at what was support becomes resistance, 101. Now we see sellers show up here. This is the void, what we call the weakest link. It's a power bar, but it's the weakest link because there's no resistance. Does it roll back over here? And if it rolls back over here, well, you do have yesterday's low. Well, that low there, it was 12 o'clock. And look where it stopped. We went over this in the green room and I marked it off there. And it came right down, looking to the left, right down there. Spiders and so on. Got turned around. So now it's up at this resistance. So do we stay in this range today, back and forth? I think that's what we have to look at during the day here and say, hey, sellers showing up here. Do we get a breakout failure? Some type of bearish pattern here at this level where it goes back down. And if it does, does it stay between this range here? Whereas this break here opened up the door to really nothing to the left except from what was here. So now, digesting the gains, more earnings coming out as we wait for all that. And igniting bar, retracing. If it breaks here, right, the downside is pretty big, but more earnings coming out. Well, we thought yesterday, well, they'd wait for the earnings, rather than to sell, and now they've done it. So clearly, as the thinking must be, tech especially has made this big move. What are they going to do for an encore? And nothing in the moment, right? So you see Apple making this huge run and making this retest pattern, what we call an M type of a top. Where is it here? 145-ish. Really not a big deal, of course, but lower. Beginnings of a topping pattern. Got some significant support down here, the 50, the 200. Of course, this will take weeks probably to unfold for that to come down here. But should it begin to move down and the others which have made big moves start to do the same, well, this is up here a little bit. If they all start doing that, well, what the Qs are going to do and so on. So we'll see, by the end of the week, how things are shaping up here as more earnings come out and how these stocks react. Covered that. And the Russell just doing a lot of nothing here. Financials, which a lot of them have reported, they started out, trying to turn around here. And we've got a lot of these patterns that might be where the money rotates into. It's too early to tell, but there's a lot of these patterns that have been going down while tech has been going up. And one of the ones that we were looking at, and it did come down, was Wynn. I can type here. So similar type of a pattern. And the expectation was for it to break the low. Now we can see if it actually can get maybe a bar like this on the other side of it. Camera saying weed stocks, Tilray. Let's get through the market. Dan can cover the stocks. Yeah. These have been really terrible with trying to turn around, but now that it's broken down. Anyway, Dow consolidating up at the high, bullish price action. No nasty drop here. And Caterpillar's out on Friday, with other earnings are coming out. Or are you looking for a bounce in those? Well, they're already bouncing. You're speaking to Cameron or me, McGraw, I know. 19, just below $19. So what? Oh, Dan. Okay. Something like this could be, it's not the textbook breakdown bar failure because it's a breaking below a pivot versus crude oil, which we looked at the time when it was forming. No, it was gold. This is your classic breakdown bar failure because it breaks below an even level there with a little bottoming tail bar and an inside bar. So a bit different than the greater than 100% retracement of CGC. That's just taking out a pivot low. They don't have that type of shock to it. There's a breakdown. This is a sell setup and it breaks the low, and that's what it's supposed to do. But trading at 19, wide range bar down, if you could trade in this range, you could get a bounce going tomorrow. And crude oil, not doing much of anything. Bitcoin, still coming up into this price resistance area. So now it's formed a range. We talked about the creation of these pivot lows and forming a bottom. And now it's up at the top of the range. And we look for similar price action always at the top of a range. The ideal scenario is that it goes sideways here. And so it's begun to do that. It's up here at the moment. But the ideal scenario is it's up at resistance. We get bullish price action where sellers come in at the top of the range, normal, and that supply and demand begins to, hey, we'll take it. Ideally, we get a break of a prior bar's low, or we get a red bar that is ignored and it turns back up again, and it's a long into the void. Right? Regardless of being Bitcoin, you can apply that type of thought process to anything. Okay. All the same price patterns. Doesn't matter what it is. It could be a little different from time to time, but the basic or foundational analysis is the same with everything. And it's just chopping down, nothing to do. Silver. Wide range bar, so far inside bar. We'll wait and see what this does. It's coming down to this low here. Right? So this is bar by bar coming lower. There's nothing to do at the moment, but it always catches my attention when I see a range expansion bar, a wide range bar like that. And you can see the drop on the 60-minute. And so when it starts going inside that way, right, the first thought is, well, it's consolidating after a nasty drop and it should go lower. And maybe it does because the low is down here. But if buyers are more aggressive, And again, nothing to do with silver per se, being bullish on silver. This is just a thought process that we would apply to anything with this alignment of support resistance in multiple timeframes, is that if we go get an inside bar and then it took out that high, even though this resistance is here, it would communicate that buyers are coming in before it got down to the destination. And sometimes, as you know, you look at an area to the left and say, well, that's where it should go to, and buyers should be there, but they show up early. And this is a pattern that could display that. We still need to see today as to what it's going to do. Dollar, we've been starting to lose momentum there. Mentioned that it was coming up to resistance and that the euro was at support. Still can't get, well, a something bar, an event bar. Here, Dan and I use different words, but what we want is a big green bar, right? Something that says, hey, this thing is really, they've shown their hand, so to speak. It's at the destination. It's slowing in momentum here. We've got a red bar ignored, but we don't have an event bar. Right? We want to see buyers come in here in a big way. And then we know, that wide range bar communicates institutions buying, and it should go higher. We don't have that yet, so I'm not interested until I see some real buying interest that creates a range expansion bar. Well, that's beginning to turn around. And this currency is pretty much, it's connected to commodities. And so you can go and look at, different commodities and see how they're doing. Probably not too well if this isn't turning around. And kind of that inside bar, range expansion inside bar. Now it's consolidating. And interest rates. Well, let's take a look at mid cap. Right. That resistance not doing anything. Transports had a bad day yesterday. Right. Keeping an eye on this, as we always do. Its weakness is in part, the anemic breath that we've seen for a while. And set an alert. If it starts coming down there, assuming the market's going to be moving lower, interest rates up here pretty much flat, doing nothing. So at the moment, kind of looking at a market that's not doing much of anything except for different stocks. You can see Google up here, up 100 points and so on. So there are things moving. Market isn't. Well, here's Dan.
All right, good morning. Yeah, the McGraw, yeah, I finally just saw what you were talking about. Yeah, the second list is call, watch. Yeah, there's a ton of earnings. So I went through and winnowed some of them down. I posted a few in Telegram pre-market. So let's go right to that list first. Now I know Tilray had earnings today. I'm assuming it's pre-market because otherwise, why the heck would you get a move like this? So yeah, that we got to put that on our list. Sure. Any news on BA? No, it looks great. We actually were in trail stop mode and it hit our stop yesterday, but the daily looks fantastic. I went into trail mode just because it has earnings coming up soon. TDOC call spread. Go through the checklist, which is put it in a 5-minute window. Thanks, Charles. And put it in a 5-minute window, see what it does. But when the gap's so big like that, $15, and it's, you know, around support here, I doubt you're going to get any good juice. But let me look at my list of call spreads. CHRW, and I did post this one as a as a short. It had earnings, but I'm shocked. There's no prints, so I can't tell where it's going to gap. But nice, look at this. You got declining 20, 50, 200 lower lows. Green bars ignored, topping tails, closing at the low on increasing volume. Price void weekly. Everything looks great for a short. We just got to see what the open's going to do. And then, as I said, a call spread also. Starbucks, you know, my general rule, I don't care what it is. If you tell me, you can do the percent here, whatever in your head, you know, but this stock went up 10%, fluid move, vertical, far from the 20, and then it gaps under this. That's what we call a bear island reversal. That's way too much buying into earnings. I don't care if it opened up, down, or sideways. I have bearish bias on pictures like this into earnings. So Starbucks is on my call spread list. Same with McDonald's, 242. You know, look, it's gapping. It's not an island reversal, but it's gapping under a green bar. Even though the weekly is bullish, I get that. I'm just talking call spreads for Friday, maybe 30-minute low. Now, somebody might say, well, Dan, based on your rationale, then why don't you want to short Google? Well, because this one has a big old red correction bar that is gapping over. So this is a totally different picture because of yesterday's bar than Starbucks and McDonald's are. Do you all see the difference there? Doesn't mean we won't, but this is not nearly as good a pattern to be fading. This is, believe it or not, it's a buy on a pullback. I mean, Goog is amazing. Apple, look at this. This is an M top. You know, right. I mean, I don't know why people have such a hard time looking at what an M is. M top, W bottom, and here we got a bearish reversal at resistance. If this did not have earnings, this would have been a no-brainer pattern to do a call spread yesterday or today under whatever. And now it's so that's a call spread candidate now for Friday. TDOC, yeah, TDOC we talked about, but yeah, that is one. QS, I couldn't tell the gap this morning really, but under yesterday's low, this is a nasty downtrend. So that's a call spread watch. GNRC, another M top, not as pronounced as Apple, just because you got some overlapping bars here, but it's a price void, M top. And so that's call spread watch. Then I have Wing as a bearish gap, gapping way the heck down here. You know, different again. It's different than McDonald's and Starbucks because it's not fluid, but it's still a very bearish gap under these three bars. So if we can short the 170s for Friday. Bullish put spreads now. Boeing, I think the gap's too big. I don't think we're going to get a credit. Gap's too big, but the put spread would be under yesterday's low. You know, whenever Boeing goes, you got to watch Jets. See, Jets, it's not bad. 30-minute high. Today's Wednesday, over Monday's high, 30-minute high. And this is FOMC day, as you all know, 2 o'clock announcement on interest rates. So I'm not going to be that aggressive on swing trades. And me personally, McGraw, your drop down. Me personally, I don't do spider 0 DTE trades on Fed day. It's like, you know, Why bother? Unless you get a great entry and may or may not be out of it by that time. But here's kind of reverse head and shoulders. Boyd, you know, gapping right over here. So that's not bad at all. It's actually a long watch plus put spread. Let me go through these other ones real quick. SIX put spread watch. You know, these are all watches. I'm not doing anything. NOV is a 1, 2, 3, but in a downtrend, but it's at the 200 and stabilized. CME. See, I saw this one print up here, 220. Well, no, I didn't. Whatever, I saw pre-market, but so now CME, I have no interest. McGraw, your drop down. SPR. Yeah. Yeah, SPR is a watch, McGraw. I'll put it on the list. SPR, and you said HXL, Hexel. SPR is a better pattern. So yeah, keep an eye on SPR. I'll get through the rest of my list here. It's not that long. Golf Delta. Now the gap's too big. Delta Tango. I already answered Bob. All right, so this one would only trigger over last week's high, and it's retracing, so no entry. Here, gap from a bottoming pattern. Bravo Golf is a put spread. EQR over the highs I like. Directional and put spread. Mattel, gap's too big. BXP, you know, put spread idea under last week's low. And then I also said KWeb. We've been watching that. It's a climactic buy setup, volume, bullish gap. So this is now a bull island reversal. And a lot of those Chinese stocks in that sector are rebounding. So any news on BA? I don't know what that means. The chart is fine. I don't check news. I don't know about news. But if you're in it long, it looks great. Stop yesterday's low. On WSR, it was a 1, 2, 3. Yeah, we mentioned this